All right. Well, hello and good morning. Welcome to our Simply Tax Talks for February 8th. It's hard to believe that we're just moving straight along into February and that but I guess there's one thing that's probably not hard to believe is there's still plenty to talk about in the tax world. There's been a lot of headlines kind of swirling, in particular around some of the filing requirements and a new schedule K-2 and K-3. So we're going to be talking about that today. So I want to invite Yelena and Tad back up, as well as Sarah Savu, who's going to be talking about schedules K2 and K3 today. So excited to have all of you here today. And I guess with that, let's jump into our tax topics of the day. So Yelena, the question's probably evolved a little bit, but I mean, it always comes around to kind of what is going on in Washington and what's happening from a tax perspective. I think we left you last week talking about, and watching Senator Manchin. So I imagine you're watching him last week. What do we need to know that happened?
Well, if you were watching him last week, he made a comment that the BBB is dead, and that's a direct quote, which made everyone kind of freak out and panic and question, what does he mean? Is this dead, or what is happening? And I think within an hour, he put out a clarifying statement saying that the BBB in its current form, so the $1.7 to $2 trillion package that was passed by the House is dead, but he's open to negotiations on a smaller package. So kind of walked that back and said, there's still an opening here to talk. I'm not completely saying no. And so that gave an opening for Democrats to start pushing, each person pushing their own agenda, saying, hey, remember, Manchin, you support the drug provisions in there, the drug pricing, the energy provisions, and whatever anyone had that Manchin has shown any support for, it kind of started pushing it again to try to restart negotiations. And as we've talked about in the past, one of the concerns of the BBB is that if it was passed as is, so the version that passed in the House, if was somehow passing through the Senate right now, it would end up in having some retroactive dates. And we've talked about, what is Congress going to do about this? Because the longer this drags into 2022, the more backwards you're going with these effective dates. And so the good news this week is that Senate Democrats and most of their aides have been putting out some quotes out there and saying, hey, we're aware of this issue. We are looking at this as we review the BBB provisions to make sure that the direct quote is having the acceptable amount of retroactivity. So we're not really sure what that means, but they said, we're thinking about this. And a Senate aide admitted that it's not good tax policy to change the tax code for the year that the IRS is currently in the middle of the filing season for. And so they're going to try to avoid that, but then they're also saying, it doesn't mean we're going to change all the effective dates, but we're keeping that in mind as we negotiate. There's also been some talk about spinning off the child tax credit into its own bill, which is kind of new, but it's been something that has shown bipartisan support. So you have Republicans and Democrats who do support the extension of the child tax credit. But if you want to get the Republicans on board and even Manchin, there's going to be some changes that would need to be made. So Manchin wants a work requirement. There are some senators that want a lower eligibility threshold. Some of them want to cut down the amount of the credit per child. So there's still some stipulations and negotiations to work through. But if they want to get this provision out of the BBB and out of the budget reconciliation negotiations, that means they're back to needing 60 votes in the Senate, which means they'll need 10 Republicans to join all 50 Democrats, which is a big ask, especially in an election year. And so even though it kind of seems like there's hope for the child tax credit to pass maybe this year, the timing is uncertain and probably actually won't happen this year, just because, again, if you're trying to spin it off as a regular bill and get Republicans on board, that's a steep hill to climb. So
it certainly is.
Been a big week.
Yeah, and we've been watching a lot around watching the votes and counting the votes, as I guess Travis Lucas would say, and that's definitely challenging right now. But I know there's maybe been a few other things that have been introduced and being talked about, and obviously there's quite a bit of other things going on that have the attention of those in Congress right now. So what should we be watching for, and what do we need to know about those proposals and maybe what we might see?
Yeah, well, a big one this week to watch for is, we've talked about this in the past. If you remember a couple weeks ago, I guess it's been maybe a couple months now, but Congress passed a stopgap funding measure. So if you remember, the fiscal year started in October of last year, and Congress was supposed to pass a funding bill to fund the government for a year. And they weren't able to do that, so they passed a temporary measure. And they've done that 2 or 3 times now. And so the last bill they passed expires February 18th, which is when the government funding runs out. And so we kind of expected that maybe they would actually go for the rest of the year this time, but instead we're hearing that no, they're trying to pass another stopgap funding measure, which means it's a temporary measure that would fund the government through March 11th. And that would give the Democrats, again, a little bit more time, another month to negotiate on the BBB or anything else they want to try to get passed. And so the House is expected to vote on that today. And if that passes in the House, it goes to the Senate. And the vote should be pretty simple because it's an extension of what was already passed. So there's not very many changes. It's just funding the government for another month. But there is some discussion about converting the continuing resolution into an omnibus appropriations package. It's a mouthful. But that would give Democrats a chance to add new provisions to that. So things that maybe they were hoping to be in the BBB could maybe be attached to this. But that's a big ask and not very likely. But that is something that's being tossed around to see if that's an available option for them. There's a couple other bills that have been introduced in the House that have bipartisan support. The Virtual Currency Fairness Act wants to exempt personal transactions made with virtual currency where the gains are $200 or less. So currently the law is that any gains from virtual currency must be reported as taxable income, regardless of the size or purpose of the transaction. So if you buy a cup of coffee, that counts, that falls underneath the umbrella of what should be reported. The proposed bill would exempt personal transactions made with virtual currency where the gains are $200 or less. And so that's another bill that's just kind of popping up now as virtual currency regulation, keeps making headlines and keeps advancing in various parts of Washington. There's also another bill. This is for charitable contributions. It's called the Accelerating Charitable Efforts Act. And this one wants to make sure that donor advised funds are made available to working charities within a reasonable period of time and provides incentives to speed up donation timelines. So donor advised funds, a lot of times the money just happens to sit there. And so a lot of times people make the donations to a fund for tax purposes and the money doesn't actually make it to the charities. And so this bill would try to change that and basically put a 15-year or a 50-year timeline to get that money out of the fund into a charitable foundation or a charity in order to get the tax benefits. And so there's going to 2-3 bills, I guess, if you count the funding bill, to keep an eye on as, House legislators try to consider that the BBB is, goes in and out and, it might make it, it might not make it. And there's other priorities that legislators, especially those up for re-election, are trying to pass through. So.
Right. Well, and that's why usually, we're talking in an election year, you don't see and hear a lot about these sorts of things for that reason. But I guess at least we know the BBB maybe isn't RIP, I guess, if you want to use alliteration here based on what Senator Manchin's saying. But so we'll keep an eye on that, Yelena. Sarah, I'm going to kick over to you now and talk a little bit about here something that there's just been a lot of, I guess, headlines from both tax practitioners and taxpayers. And I thought you had a really great article that we just had come out on our BKD Thought where that talks about it. So Sarah, maybe let's just start with what in the world is the Schedule K-2 and K-3 in the first place?
Thank you, Damien, for having me. It's a pleasure to be here and discuss this fun new topic. So Schedule K-2 and K-3 are additional reporting schedules that must be attached to the tax returns of flow-through entities, specifically domestic and foreign partnerships and S corporations. So these schedules contain a lot more information than what was previously required to be disclosed on Schedule K-1. The K-2 and the K-3 essentially replace, supplement, and clarify reporting of international items that were formerly reported on lines 16 and 20 of Schedule K of Form 1065, for example, and the corresponding line items of Form 1120S and Form 8865. One way to think about the new schedules is that Schedule K2 essentially follows Schedule K by reporting the partnerships or the S corporation's information, and Schedule K3 follows Schedule K1 by reporting the individual partners or shareholders' information.
Interesting. Okay. So, I guess what's the big thing that has everybody concerned right now, and maybe why surprise? Because honestly, you and I were talking about the schedules K2 and K3, back in the fall when we were learning more about it. So what's been the big thing in the last couple of weeks that's caused everybody to be, I want to say up in arms is almost kind of how the reaction seems to be at times.
Sure. So when the forms were originally released this past summer, there were a lot of questions surrounding the phrase items of international tax relevance. So basically, a lot of practitioners were concerned by the vagueness of this phrase. And so the IRS ended up releasing clarifications and amendments to the form instructions in January. The update that really, threw people or kind of confirmed their apprehension was to the Who Must File section. The IRS clarified that partnerships or S corporations may be required to complete Schedule K2 and K3, even if the partnership or S corp has no foreign source income, no assets generating foreign source income, and no foreign taxes paid or accrued. So obviously, this greatly expanded the reach of who is potentially required to file these schedules, and is also having entities ask why do we have to file these schedules when we don't have direct foreign activity? But these schedules are really intended to equip the partners and the shareholders to accurately complete tax forms related to international provisions, and this information required to complete those forms is inclusive of domestic activity.
I see. Okay. So I guess, is there relief? Because I mean, it's a first thing that we're going through. What is relief, if there is any, and basically what do we know now then based on that relief?
Yeah, so the IRS issued notice 2021-39, and this provides relief from these penalties for the 2021 tax year if the filer establishes that it made a good faith effort to comply with the Schedule K2 and K3 filing and furnishing requirements. When determining whether good faith effort was made, the IRS will take into account the extent to which a Schedule K2 and K3 filer has made changes to its systems, processes, procedures, to the extent which the entity has obtained information from its owners or applied reasonable assumptions when information is not obtained. So basically, the entity has to prove that they made a good faith effort in determining whether any of this information is required to be reported at the partner or shareholder level. So there needs to be extensive communication between the partnership and its partners, or the S corporation and its shareholders, to determine whether the entity is required to file these schedules or not. And the IRS will take that into consideration when providing penalty relief.
I gotcha. Okay. And I'll just say here too, and sorry, I'm having a little bit of a lag on my internet, so sorry about that. But one thing I will notice, Chris, you had a comment about the link. We'll get that updated in the chat there, because I think, Sarah, you did a really great job with that article and talking about kind of these widespread consequences. But I do want to open up to those that are watching from home here. Let us know what your questions are. Again, that's kind of our goal with these live streams. We got the polls and the comments so that we can help you in real time. But Sarah, what is probably the most frequent question or the big takeaway that you would leave everybody with about the schedules K2 and K3, and just kind of managing that and the expectations, whether you're a taxpayer or a tax practitioner, this in the coming months ahead here?
So basically, the biggest question I would say is, are we required to file? Like, I have a partnership, I have an S corporation, we have no domestic activity or no foreign activity. Are we required to file this form? So basically, the IRS has advised that you should assume that the schedule is required for every partnership or S corporation return, unless you can definitively state that you have documentation that the partners or the shareholders do not require any of this information to be reported on their personal or corporate, if it's a corporate shareholder, tax return.
Okay. Well, thank you, Sarah. Again, we've got Sarah's contact information here. Again, the article. We'll maybe loop back for the end of the session here if anybody has additional questions. But let's move over to get our take from Tad with our weekly Tad's Takes. It's one of those things you try to say it 10 times fast or something, Tad. So I guess what's your take? And I probably want to start with, you and I were chatting the other day, and there's obviously things like the ERC and the PPP are still in the conversations, but in particular around the ERC and maybe with startups. What's your take? What are you seeing, and what should maybe be in the conversation?
Well, one of the things that, is kind of timely right now as we're starting to get into the 2021 compliance is we've been really focusing on the retention credit, but strictly the retention credit for the full-blown credit. But, with the, one of the later acts that came out, in 2020, late 2020, they came up with this concept of a recovery credit. So, in essence, what this is it's a separate credit, same calculation for the retention, but it's more for people who actually had the kahunas, I guess, to start up a business in the start of the pandemic. So the requirements is that you would have started a trade or business, after February 15th of 2020. The total gross receipts, average receipts for the employer are less than $1 million for a 3-year average. I'll come back to that in a second, because that's kind of that one doesn't really kind of make sense when you think about somebody that's starting up. How can they have a 3-year average? But we'll come back to that one in a second. And the third qualification is that they do not qualify for the regular retention credit, either through the 20% reduction or the full or partial suspension. So if you meet those 3 requirements, you actually get kind of almost a free pass. Now, here's kind of the downside. It's only effective for the 3rd and 4th quarter of 2021, which the first thing you're going to say is, oh, wait a minute, they took the retention credit away, for the 4th quarter of 2021. And you're right, they did, but they left the startup credit in there. So there are 2 quarters where you can actually qualify for this. And the credit calculation is the same thing. It's a 70% of the first $10,000 of compensation, capped at a $7,000 credit per employee. But the total credit for the employer is limited to $50,000 per quarter. So max you can get is a $100,000 credit, but $100,000 credit is a nice credit. So what we're really trying to say here is that kind of keep an eye out as you're preparing returns, that this might be a 2nd-year return or a 1st-year return, for a new employer or something like that. Just kind of keeping your mental checklist that did they apply for the recovery startup credit? You could be a real hero to somebody like that if you go to your partner or to your senior manager and say, hey, look, I don't think these guys filed for the credit, and you might be able to give them $100,000. So just keep that in mind as you're going through these new returns. And again, let me go back to that $1 million qualification and 2 other things too. And it doesn't make sense really that if you're a startup business that started February 15th of 2020 or after that, how you can have a 3-year gross receipts average, and it really isn't ever explained. But what we're probably thinking is happening here is that if you have an existing employer who started a new trade or business, then you would have to go back and look at what the gross receipts were in the prior 3 calendar years to make sure that they're under $1 million. The other thing that's out there that is a bit unknown right now is whether the business has to be a completely new business or new to you. The guidance that has come out has not really told us whether that if you acquire an existing trade or business, the assets of it, whether you can actually qualify for the startup credit. They have not given us guidance on that, so that might be one that you might want to hold in abeyance for a little bit to see if they come out with something else, which I really doubt that they're going to. But that is one that is a bit of a question mark that's out there right now. Same filing requirements. You go back and file an amended 941. To get the credit, there's a separate line on there for the startup retention credit.
Yeah, and so you bring up, mentioning the amended returns and getting this processed, and probably a most frequent question I've been getting the last week, Tad, and I imagine you have too, is around the timing of those and actually getting those refunds. If you filed a 2021, let's say, amended payroll tax return, and you're waiting on that refund check. What are we hearing? And so, like, what should a new startup business maybe that determines and finds out about this expect in terms of the time it'll take to get the dollars in their account?
Don't spend it. I mean, look, it's the same thing we've been talking about for the last 6 weeks, on this thing, is that it's just a very, very slow process. I mean, everybody's been reading what's, been in there about how far behind they are about, shifting 1,200 people to get out from the backlog, which, I mean, it's one thing to shift 1,200 people. It's another to shift 1,200 people that know what the hell they're doing. So I don't know if we got any interns listening here, but it would probably be somewhat like, training a whole bunch of interns, out there, is that your experienced people are going to spend a lot of time, training the new people, the 1,200 people out there. So I'm not sure that's going to be the answer. Look, they've gotten enough bad press on this thing. Everybody knows they're behind on it. So you just sort of, file the amended return and wait.
Yeah. Yeah, and it's an envious position they're in. Exactly, like you said, they're doing what they can, but it's hard, right?
Right.
So okay, well, I want to ask you a little bit about, because I know you've just been tremendous, Tad, just to pay you that compliment in the Paycheck Protection Program area and figuring all of that out, and we haven't talked about it in a while. So I'm curious just what stories you're hearing. I know it's sort of coming up at, we'll call it last call at the bar here for those maybe that got a second PPP loan. What are you hearing from the SBA and the forgiveness process, so people know what to expect out there?
Yeah, it's been kind of interesting, especially here in the last week or 2 weeks. It seems like we've been getting more than what I would have thought we've been getting about requests for additional information by the SBA, which really means they're actually looking at these things, which is, I don't know if that's good news or bad news, but some of the stuff that they're requesting is just, they refer back to the instructions, but we've actually had some that really have dug deeper, and made multiple requests of additional information. So a little bit troubling from that standpoint, that look, if the employer or the borrower has made a good faith determination, that they met all the requirements for full forgiveness, and it does appear, and we've actually had 2 or 3 that come back where the SBA did not allow full forgiveness, and came back and said, look, we don't think that you're entitled to the full amount. Well, not, we don't think that you are not entitled to the full amount. So then that begs the question, what do I do next? And there is an appeal process out there, and we probably got about 2 or 3 that are going through that process right now. It's early on. It's somewhat akin. I mean, the appeal process has been there for some time. It's been as part of one of the later past, not the CARES Act, but one of the later ones, that they actually did give an appeal process, for a borrower who was denied full forgiveness, and it's somewhat akin to the IRS appeals process. It's an independent section within the SBA. It's always been there. There's always been an appeal process for other SBA programs, but they're just bringing this one under the hood of that. But I'm afraid what's going to happen here, it's going to be a little bit like the amended return thing with the IRS. These guys are going to get so inundated, because everybody who gets turned down is going to appeal it, unless there's something really egregious out there. So, but I am a bit surprised about what we're seeing coming back.
Yeah. Well, especially like you said, the resource constraints, right? And I think that was the biggest question, is how are they going to approach this, and what are they going to do with it? So, okay. Well, Tad, any other takes you kind of add in here? Either ERC, PPP, or otherwise?
All I know is if you got a K2 or K3 question, thank God we got people like, Sarah and Craig Kuchenberg and Chris Clifton and all the ITS people. So, I can't even spell that stuff. So, I'm glad that we have them out there.
I will echo you on that, Tad. It's a lengthy form, and it's new things, and so it's a lot to digest. And Sarah and Chris and Craig in particular have done a fantastic job.
Yeah, and the only other thing I would tell you is that I'm sticking with my guns. There's going to be nothing come through on the BBB thing, or even any real tax consequences out of it. So I'm sticking with my guns on that.
Okay, all right. You've been sticking to those guns for a bit here. So all right, we'll stay with that. So. Well, let's get our top takeaways for this week's session here before we wrap up. All right. So actually, Sarah, I'm going to go back to you just to kind of get your top takeaway. And I'll say a question that we did have come in has to do with Form 1116. And maybe you could talk about the relationship there, maybe what the form is and why that would impact things with this whole Schedule K-2, K-3 thing.
Sure. So Form 1116 is the foreign tax credit form for individuals, and information from the Schedule K-2 and K-3 is relevant to individual who files Form 1116 because they would need not only just the foreign source income, but you need worldwide income, you need worldwide assets for expense allocation. So if an individual files Form 1116 and they also have an investment in a partnership, the partnership should provide Schedule K-2 and Schedule K-3 with the relevant information to the individual so the individual can accurately complete their foreign tax credit calculation on Form 1116.
Okay. All right. So again, yeah, any takeaways there? Maybe just to, I know you would have been very helpful to me. Maybe this, again, that you're willing to help and answer questions. Is that fair to say?
Yes, of course.
Yeah. Okay. All right. So Yelena, I'm going to give you a chance to respond to Tad's take that nothing's happening. What are you watching and what's your prediction on that and whether or not we'll see any tax related changes moving through here?
Well, it probably won't be the next several weeks, mostly because, well, nothing's been redrafted. I think everyone's saying they're open to starting talks, but it would be basically starting from scratch. So, I mean, the original BBB took months to negotiate, so I don't see anything coming out really fast here. But also, Senator Lujan recently suffered a stroke, and so he's one of the Democratic senators, which means he's out of the office for at least 6 weeks while he recovers, which, again, Democrats need every single one of the 50 votes they have in the Senate to pass anything. So it's really unlikely they'll be voting on anything for at least 6 weeks.
Yeah. Having that working majority is, or I guess working without the majority is very difficult, as you said, and restarting at the same time and dealing with the funding and all that. So there's certainly a lot on the plate, and we'll have to keep and watch that. So. Tad, you already made your prediction, your take for the week, but any closing thoughts from you before we wrap up?
I have a couple. I would first of all put out not a challenge, but a request. So any of you folks out there that are preparing returns, send me a quick email or note if you did pick up the startup retention credit for somebody, and we'll pass some shout outs to you, for doing that. And then secondly is in connection with that PPP appeal process, look for a ThoughtWar article that's coming out. Ann Coughlin, from the national office has, volunteered that she's going to write a, kind of a ThoughtWar piece, regarding that appeal process, because I really do think we're going to see quite a bit of that. And you're going to get some questions from clients, regarding the fact that they may not have gotten their full second or their first, PPP loan fully forgiven.
Okay. Good to know. And that's just to mention that ThoughtWare subscription. I don't know. That's again, the article that Sarah was talking about, all the things that we're talking about here. That's our goal, right? As a firm is to be able to provide this information. And so thank you for sharing all of your takes today, Tad, Sarah, and Yelena. Again, we have the contact information. We'll put it in the description as well in the video if you're watching this after the fact. So I guess that's going to kind of bring us to the end of our session here for today. But as I was saying at the beginning, if there's one thing that we do know, there'll be more to talk about next week. So tune in again, same time, same place. Until then, thank you for watching. Thank you for participating here, Tad, Yelena, and Sarah. And have a great week, everybody.